Well, I wanted to give you a brief introduction as we start today as to why I do these webinars, and I've started in July. And the reason is honestly because every advisor is on a journey. And I recognize that, and it's important to tell stories of advisors because other advisors are impacted when we share our stories. And we each have a story, and we are each somewhere on the journey. And my goal with this is that we are encouraged as we walk on the journey together. And basically, as we hear from one another, iron sharpens iron and we become better at our craft. And that's basically the idea of why I do this. And it's really about personal transformation. It's being transformed as an individual, as an advisor, so personally and professionally. And when that happens, we begin to change and we become agents of change. We begin to engage more in community and ultimately to have a kingdom impact. And I'm happy to welcome Steve on the call today. And Steve is an advisor who's got years and years of experience. And he's been, I'm thinking 38 years, is it, Steve, in the industry?
38 years next month, Lauren.
Okay, well, so lots of experience, and I will probably rub it in a little bit about his gray hair. His wisdom is showing through, and it's shining very clearly. So, Steve, thanks for joining us to be part of this, and I wanted you to share a little of your journey, a little bit of your background, first of all, as we get started here. And I will say that I got to know Steve when I stepped into this role because Steve and I live fairly close together when it comes to distances in Ontario. We've been basically 20 minutes apart, and we've shared many breakfasts together, gotten to know one another quite a bit. And it's quite interesting to see Steve's journey, and he became a certified Kingdom advisor in 2014. But Steve, if you want to take a minute, even go back before that, share your background, but more specifically, share your journey since then. That would be great.
Okay. Well, Lauren, I started in the business in January 1983. Finished the Chartered Financial Planner designation in October that year. And I've had many different experiences from the early and mid 80s working as an advisor. I had a few years working as a trust company branch manager, and then as a general manager of a mutual fund dealer. So I took all that stuff and I started my own company as a mutual fund dealer and a financial planning practice in 1994. And when Lauren Jackson started Advisors with Purpose, whatever that was, 12 to 15 years ago, something like that, I was involved in that as well and started learning something of what the Bible had to say about money. But I don't think it really hit home to a full extent until I took the core training in 2014. And when I started to do it in March of that year, I was so excited with it. I think I went through all of the material in 6 weeks. I just couldn't put it down. And I think the most impactful principle, the most impactful message that I learned from Ron Blue is that God owns it all. So when you start thinking about your own money and resources in that way, and looking at the world in that way, it definitely gives you a different worldview and a different perspective in which to look at your own finances and that of your clients. So it's been a great journey.
Yeah, that's awesome, and we'll get into that. And I do want to let everybody know that we will have opportunity for Q&A. So my goal is to chat for about 30 minutes and then open it up for Q&A. So if you have a question that you'd like to ask, certainly put it in the chat box. I have a few slides, Steve, that I've put together. And here's a new one that I didn't share with you when we discussed this, but I'm going to ask you about the resources, and maybe I should get into that first. But just on the note of being challenged with what the Bible says, here's something that's personally challenging to me from Money, Possessions, and Eternity, which is one of the resources that you're going to talk about. But it says, what we do with our money doesn't lie. It is a bold statement to God of what we truly value. But what we do with our money doesn't simply indicate where our heart is. According to Jesus, it determines where our heart goes. If most of your money is in mutual funds, retirement, your house, or your hobbies, that's where your heart's going to be. And boy, does that ever challenge and resonate, I think, with all of us as financial professionals, because the reality is most people have a lot more in their retirement, a lot more value in their homes, maybe their businesses, than they do in kingdom. So, Steve, I don't know if that was challenging to you, but I'd like to throw it over to you to ask you about some of the resources that you've gotten into that brought about some change in your life.
Well, it's appropriate, Lauren, that you started out with Randy Alcorn, because Randy was certainly the guy that really got my attention and challenged me, a good 10 or more years ago. And he sets such a high standard himself personally by capping his own personal income and having the revenue from all of his books and other resources go directly to his charity. He's also capped his assets. So Randy asked himself personally the question, how much is enough, a very long time ago, and then illustrated it to us through his lifestyle, through the way he lives on a day-to-day basis. So, Randy Alcorn is certainly one of my heroes of the faith, and definitely of his demonstration of the biblical financial principles is second to none.
Mm-hmm.
Next guy on the list, of course, is Ron Blue, who I first became I guess I became most familiar with the core training. And then, I've read a couple of his books, in particularly Splitting Heirs. And I think we're going to be talking about some of those principles in depth. Again, Randy Alcorn is number 2 on this list, Money, Possessions, and Eternity. And I find, and I think we've shared this together before, Lauren, that it's good. I find it good to reread this book probably once every year or two, just to hone up on all of the different teachings that Randy has to offer.
Mm-hmm.
The Eternity Portfolio is a resource that was originally given to us under Advisors with Purpose, and it's by Stephen Rolston. And I confess it sat on my bookshelf for years and years until we had Alan Garthart as a study group one month. And then, I've got that book. I'm gonna take it off the shelf and actually read it. And it was one of these things that was very enlightening. And I took his principles from the Eternity Portfolio and incorporated those into my financial plan as well. And when I was at the national event 2 years ago, John Cortines and Greg Baumer were there with their book, and John spoke, and their message really resonated with me. So, true riches, what Jesus really said about money in your heart. And I've incorporated that directly into my financial plan. And right at the beginning, I've got a preamble from their book, which is God's to-do list for us as Christians. And there's 3 points: serve the poor, save the lost, and strengthen believers. So that really covers a lot of the major tenets of the faith. So as far as incorporating those principles right in my financial plan, I've done that. I'm not sure if I'm skipping ahead or not, but one of the things I've impressed upon Lauren as one of my major points when I'm talking to clients and even other advisors is the value of actually having a written financial plan, of having your stated goals and objectives down in black and white. I use a Word document myself, and I probably review that at least once a month to keep it current and make sure that I've got any recent tweaks updated there, and if I've involved in any new charities or any things of that nature, I've got those incorporated as well. But I find having it in writing is absolutely the best thing you can do. I read once somewhere that once you put down something in writing as a goal or an objective, then that automatically starts you moving forward towards that goal or objective. So it's half the battle just getting it down in writing.
So how has these resources specifically influenced you in your financial plan? Obviously, giving has been a part of that, a big part of it.
Yes.
And I will tell you, if you don't mind me sharing this, Steve, you asked me to do an exercise with you, which is the contentment exercise. And I use the contentment cards to go through the live, give, grow, categorizing it. And I don't mind sharing this because I've heard you share it yourself, that we crunched the numbers. And I appreciate your vulnerability and your openness, and it speaks to your heart. And I believe it's the biblical principle sinking in, because we crunched the numbers and your giving was less than you desired them to be. And I came back with those numbers, and you can probably tell the rest of the story as to where it goes from there.
Yeah, it was kind of funny, actually. Lauren asked me for a copy of my tax return and my company financial statements as well, and he took that information primarily on the income side and then on the charitable giving side, and I'd assumed from the way I was doing things that I was right there with giving at the 10% level. But when Lauren worked out the numbers, I forget the exact number now, but it was something like 7 point something whatever percent. And so I said, "Oh, son of a gun, looks like I got to write out checks for $3,000. So that's what I did that day, and I've haven't let Lauren forget it since. But I think that brings into account that a little bit of accountability. I think that most of us need to bring in either accountability that you can arrange yourself, because I know Lauren does that exercise every year, him and Kathy, and going over all those numbers. And so it was helpful for me, for Lauren to do it the first time so I could see just how he crunched those numbers and arrived at his conclusions. So it's certainly an exercise that I would recommend to everybody if you haven't looked at that as yet. And those tools are available right on the KA website.
Yeah, you can crunch the numbers to determine what percentage of your monies each year are going to each particular category. And it's definitely a worthwhile exercise. It challenges you. I know for me, around tax time is a great time to do it because a lot of the numbers, a lot of percentages you can get from your tax return, obviously. And my goal is to increase my giving. I want to see that percentage go up every year. And that's, of course, challenging. But Steve, I also wanted you to talk a little bit more. You mentioned about your financial plan. Well, a little bit about your estate plan and some of the principles that from these resources that's guided you in establishing an estate plan for yourself.
Okay. Well, I'll just back up a little bit, Lauren, and I'll go back again to that core training where I mentioned that God owns it all was a major thing. And the second thing was stewardship, really explored and developed in that core training. So those were things that were certainly on my mind for the next few years. I started to engage once again due to my age and my white hair, as Lauren likes to refer to, in my succession plan. And I was able to hire a young man 2.5 years ago. And at that time, I looked at that as a great opportunity to incorporate the biblical financial principles right into our day-to-day work. So right from the get-go, the young man I hired was Joe Becker. I believe he's on the call today. And we started having staff meetings fairly regularly. And we always concluded those staff meetings in prayer, praying for the clients that we were going to see that day, that week. And we also incorporated a one-pager that the Ron Blue Institute developed and distributes that has been circulated at some of the KA events. So I'm sure a lot of you know what I'm talking about. Anyways, we had a couple hundred copies, color copies of that resource made, and we've actively used that piece with a lot of our Christian clients. We haven't so much incorporated that with the non-Christian clients, but what I've been doing over the last several years, I've been involved in charitable giving for over 20 years. And the last several years, I've been bringing that concept to clients more. So not directly, evangelism or discipleship, but the angle from helping those, less fortunate in the community, hospitals, and that type of thing. So that's how those type of things started to develop. Now, in my own financial plan, I guess with a combination of all of these resources I'm talking about, the core training, the Randy Alcorn influence through Money, Possessions, and Eternity, and Ron Blue's Splitting Heirs, as well as John Cortina's work and the Eternity portfolio. So I've actually incorporated all of those things into my written financial plan. And so that has highlighted those things for me. And I've revised my estate plan over the last couple of years to reflect those values. One of the things I was going to mention by all the bullet points that Lauren and I went through was that probably like a lot of you, I've got a pretty good life insurance portfolio. So when I take into account what my estate plan is going to look like when I incorporate several $100,000 of life insurance, as well as real estate, RSPs, other financial assets, then my assets are look somewhat substantial. So one of the things that was a concern there, if I took the no-brainer approach to writing your will, and I've got two kids, I just split everything down the middle for 2 kids. Each kid would get $1 million, and that's too much as far as I'm concerned. So I incorporated a couple of other concepts in there. One being, charitable giving, and also the government thinks they should get their fair share too, but of course that's negotiable. You can actually push the government out of your estate plan by incorporating the charitable giving concepts in there. So by incorporating the biblical financial principles, the eternity portfolio, meaning that I've got specific Christian charities listed in my will, and other charities that are meaningful to me from the community, like a hospital and a community foundation, that type of thing, and also things that are meaningful to my daughters. That I built an estate plan, which I'm pretty happy with, which basically leaves 60% of my estate to my daughters and 40% of my estate to charities. Amongst those charities are the Christian ones and the other ones, as I mentioned. And so there'll be 8 different charities that will get fairly substantial bequests. So when I've communicated that type of thing to my daughters and gone over this information with them, they bought into that plan right away. So,
yeah, it's interesting. I'd just like to review a couple of slides I put up on the screen, Steve, as you were talking. But if you look at the Eternity Portfolio, this is something that you had gathered from that book. Yeah. We encourage all of our clients to set aside a portion of their cash flow to dedicate to saving for retirement, saving for kids' education, and or for paying down the mortgage. These goals each form a part of our personal financial plan. Why not have an eternity financial plan whereby we store up for ourselves treasures in heaven? That, to me, is just such a powerful statement, or a powerful question, I guess, and it goes to our priorities. And so what you're saying is, instead of having your estate go just to your children, then why not include charity, which, again, in, well, that's not the slide I was looking for, in the Eternity Portfolio. Maybe I can't find the slide that I was on. Okay. But before I turn it back, I did want to leave this. This is something, Steve, that you sent to me this morning in a devotional. And I just wanted to grab this quote because it really resonated with you. It says, "The greatest legacy we can leave is not money or belongings, but the truth that changes lives."
Right.
And I recognize in your life that you are about leaving a legacy that changes lives, which I think is part of the 3 choices you got with your money as to where to send it, right?
And to give credit where credit is due, that's from a Charles Stanley devotional, which is one of the ones I do on a daily basis. And it was totally devoted this morning when I read it to leaving a legacy. And of course, leaving a legacy can be interpreted many different ways. But if we leave a legacy of good Christian values that are reflected in the way we live and the way we relate to our children and the other people around us, then we can't do much better than that.
So, Steve, let me ask you, was it challenging for your children that you were going to leave so much to charity in your estate, or was there some resistance to that, or did they just embrace it?
I must say, Lauren, I think they were pretty familiar with the way I do things. And, I've also incorporated charities that are meaningful to them personally in the plan, so they can feel more part of it. But I think most kids, they look at their parents and they say, well, we don't really need any of your money, mom and dad. Whether that's entirely sincere or not, that's what most of them say. But anyways, they bought into it right away. There was no issues there whatsoever.
So this journey that you've been on, how has it been influential, even in your advice? Has it changed your advice to clients any? And we're going to get into the transition in a minute, and I do want to open it up for anybody to ask any questions. So feel free, if you have a question for Steve, just put it in the chat box, and we'll try and get to that. But yeah, talk a little bit about how all of this, what you've gone through personally with your own plan, your own estate plan. And I'm reminded of what Ron Blue says often: you can't take a client where you haven't been yourself.
Yes.
So you having gone there yourself, has it impacted your advice to clients, particularly in the planning with them, but also with the estate planning, in the estate planning area?
Absolutely. Because I think what it does, Lauren, it just gives me the confidence to push through and talk about these topics, which they're difficult topics where for a lot of people to discuss. A lot of people don't like to think of their future death and anything related to that. So probably the largest client that Joe and I deal with, the largest clients we deal with, I know there was a bit of reluctance like that with them, but we've been able to have a very good conversation with them along these lines. And I find it often takes years before the advice you give and revisit again and again actually takes hold. One of the ones I think I mentioned at a seminar that we put on a little over a year ago, Lauren, that you attended. I talked about a non-Christian client that was approaching 90 years old, that she had ample resources, way more money than she ever needed, but she was a former bank employee. She used to administer GICs for clients, and she liked to hold that money pretty close to the vest, because I think that's what her whole career was based on, doing this type of work. So now she could only do it for herself. So she liked to look at it. You know what I mean? But one of the things she had as an asset, and that started when she worked at the bank, was she owned bank shares. And, she kept on, she inquired more as the years went on. Well, she ended up with about $75,000 worth of bank shares. And one of the things that I noticed from her tax returns every year, she was one of these senior people that were the target of all this telemarketing by charities. So she would give, little amounts like $20, $25, $50 sometimes to, whoever called her on the phone. And I said to her one day, I said, rather than doing that, why don't you, give some, one large amount once a year, that type of thing. So, it took a couple of years for kind of that to sink in. But in the end, after about 5 or 6 years of plotting, she gave away her bank shares to, I think, 7 or 8 different charities. And in so doing, she saved approximately $30,000 in income tax just on the charitable tax credit, plus, of course, by transferring those shares directly to the charities, also the capital gains tax was waived, so there was further tax saved there. So the interesting thing is, basically, all she really gave away was the increase in value of the shares, because the amount that she had originally invested in those shares was completely recovered through income tax. So it was kind of a win-win all around. And I wish I could report that I saved that lady for the Lord. I ministered to her in that way, but the message didn't get through that way. But she definitely would have helped a lot of people through the charitable giving, anyways.
Yeah, well, it's also difficult to know how far your advice has penetrated, and lots of times we can kind of say, well, I wish she had gone further, but yeah, I mean, it's just sharing these principles and the joy of giving, and I think bringing people to a place where there is joy in giving. So we got a couple of questions come in, and I have a few more because I want to get to your business transition before we wrap up as well. But one question is, how early did you start your conversation with your daughters regarding your estate plan? Did you have a formal meeting with them, or just kind of was it more casual?
Yeah.
So your thoughts on that?
Yeah. Good question, Forrest. I've got two daughters, and I had discussions with each of them at different times. One of my daughters has been with the Lord her entire life, from attending Sunday school right on through now. And she's got two young children of her own with her husband. And so the concept of giving, tithing, was originally taught to her by her mother. And, I learned a lot from that myself. She and her husband have particular charities that they support in addition to, giving to the church. So, I didn't have to do any convincing or anything of that nature. Is basically, here's my information. This is what this is what it all comes down to. I've got it organized in this binder for you. And my more recent conversation was just a couple of months ago with my older daughter. And I actually went through my entire financial plan, my written financial plan, and my estate plan, and my will, my list of charities I support, everything bit by bit. And I also gained some information from her of which charities were important to her, and incorporated that charity into the plan. In fact, while we were on the call, I just got an email from my lawyer that I'm to see her next week, just with the latest tweak or update to that will document. So again, that was well received, and I've still got more work to do with my older daughter as far as the concept of training up the next steward, because whereas the younger daughter is it's kind of a natural for her, it seems to be a little bit more difficult for my older daughter. So there's more ongoing work I'll be doing there, but they certainly bought into it very easily and support what I'm doing.
Yeah, and I just wanted to bring up some of the principles that are in Ron Blue's book.
Yes,
that is good to reference, and the Uniqueness Principle. Steve, I don't know if you want to comment on those, but I think just to have a look, and they are in the book Splitting Heirs.
Yes.
And by the way, I'm going to give you an opportunity to get a free copy of that before the end of the call today, so stay tuned for that.
Okay.
But the wisdom principle, which is really one of the things you're talking about, is passing on wisdom before you transfer wealth to them. And the given while you're living, you're really doing some of that, Steve. The stewardship principle, you talked about that. That's really the foundation of where you're going. So and even your whole the way you've lived your life, at least since I've known you, it's based on this stewardship principle. So if there's anything you want to add to that, that's great. But we do have a couple of more questions if you want to jump to them.
I'd just like to spend a moment on the uniqueness principle, because that's one of the principles that Ron teaches in this book that us as Christian financial advisors need to know and need to be able to pass on to our clients. And his concept is very simple. Love your children equally, but also look at their lives, look at their situations uniquely, because our children aren't all the same. So I'll just discuss my two daughters briefly. The younger one is a teacher. She's married now with two young children, and her and her husband have chosen for her to be a stay-at-home mom. So they have, some specific needs because of, raising those kids on one income. Now, this daughter is very astute with money management, so I've got no issues there. My older daughter, however, she's a professional, but she has a particular medical condition that allows her to only earn a lesser income than most people in her profession. So there's some uniqueness there because of that. She is married. She's 38 years old. Her husband is in his mid-40s. They have no children, and there's really not any expectation for children either. So we've got two different situations. And in my conversations with Lauren and my, considering this and praying about it, of course, I came to the determination that I was going to treat them equally. Not the cookie cutter approach that is most often used. Okay, I got 3 kids or I got 4 kids, divide the estate 3 ways or 4 ways. But it only came to this decision after considering each of them uniquely in their uniqueness. So I think that's the type of approach that Ron was referring to when he was discussing the uniqueness principle.
Mm-hmm. Yeah, that's good. What about hesitancy around? Question just kind of disappeared off my screen here. People who are hesitant to discuss this whole Christian biblical principles. Even Christians can somewhat be reluctant in that area about integrating faith into what they're doing with your finances.
Yeah.
How would you respond to that?
Well, it's kind of interesting. I was having a discussion yesterday. Probably since I was around 20 years old, I've been a fan of reading self-help books. So if you look at Ron Blue's, that one pager that I was talking about that Joe and I use all the time, and if you took a lot of those principles from that page and discuss them with people, they're things actually that are well known and are in common usage. Just as many of the main principles in the these self-help books. But what people don't know is that these principles came from the Bible. So I think if we start out with these type of people that have got some reluctance to embrace the Bible, or they might be thinking they're embracing religion or a particular church, they might have had some bad experience in the past. So I say take a backdoor approach. Talk about the principles that you feel they need to work with, and then once you've got their buy-in on the principles, then give them the information. That's actually from the Bible.
Mm-hmm. Mm-hmm. Yeah, there you go. I just want to put this quote up from Ron's book. It says, "The worst thing you can do is to pass wealth to an adult children if you haven't passed wisdom. And money has a symptomatic power about it. It brings out in people and families symptoms of problems that lie underneath." And that's quite interesting. And it makes the conversation, I think, with clients very challenging, because you can uncover things that even in some cases, maybe the client didn't even realize was there. So that kind of leads into Elijah's question: how can you handle clients who don't want to discuss their estate plan now, but want to rather update their will and surprise their children when they both pass away? So they just don't want to discuss it while they're alive. And I think there's another quote that Ron Blue says, there's going to be a family meeting. It's just a matter of, are you going to be there or not? Yeah. to be part of the discussion.
Yeah.
So.
Well, Elijah, I think that's a very good question. And as Lauren has mentioned, I've never been reluctant to speak about my own financial plan and estate plan when I'm talking to clients or other advisors. And I think that's what I do in this situation. I just go through my own estate plan and what I've done, and the fact that zero income tax is going to be paid in my estate, and for the reason that I've incorporated, charitable giving in that estate plan. But the other benefits is that my children are informed. They know what to expect. If they want everybody to be surprised, that's interesting, but there might be some people that are disappointed to the point of being upset. That creates a rift within the family, and I think that's the biggest thing we have in our favor, is to encourage open family communication, and very good communication from the parents to the children as to why they've arrived at this estate plan after having discussed it with their financial advisor, preferably Christian financial advisor, the lawyer, and their accountant, whoever is involved in their tax situation. So it's been a very thought out process, and documented very well through their will, and what documents they leave behind for their children and their executors to access. So I think that's a much better approach. So I would warn them against having a surprise party thrown after their death to reveal what's in their will. Not a good idea.
Yeah, good. Thanks, Steve. And I'd like to transition now a little bit to where you are in life, in that you are, I guess, at this stage, semi-retired. But I want you to talk a little bit about the succession plan and how you believe and feel that biblical principles have really influenced what you have done. Because I think there's an industry way to transition and retire out of the business, and maybe there's a more biblical approach. And I think you have probably sought out biblical wisdom in that area. So I'd like for you to speak a little bit about what's guided you in the succession plan, and even some of how you have structured that succession plan, because I know there are probably younger advisors on the call. There may be more senior advisors on the call who are also going to go through that. So what advice would you have in that situation?
First of all, coming up with a succession plan and a candidate to fit into your succession plan is a very difficult thing to accomplish. And I started working on mine 12 years ago, and actually had a successor chosen at the time that I had work in my practice for 2 years before we figured out this isn't going to work. So it took me a long time then to go back after that to revisit it, which I did about 4 years ago, where I met a young man at a KA event, actually, and he approached me. In the end, after a little while, that one didn't work out either. And my wife was actually able to give me a referral to a young man that she knew from the bank, that she helped him and his wife buy a home. And that was on a Sunday when she told me about that. And we made the phone call and had a meeting that Sunday night. That was just over 2.5 years ago now. So what I did was I hired a young Christian man, married with 3 young kids, staying home mom at home, and so we've been working together for 2.5 years now. We've been incorporating these biblical financial principles in our day-to-day work, and having prayer time within our staff meetings. So it's worked out well. And what I found over the last few years, we just keep on getting blessed with a regular flow of new large clients, and it's definitely helping pave the way for what the succession plan looks like on paper. So what that looks like on paper is, I said, okay, well, I'm hiring a young man now with a family and responsibility, so I'm going to have to pay him well. So Joe's getting paid a good salary. He's got an opportunity to make extra income through commissions. We just actually inked our deal several weeks ago, and all he had to do was write out a check from some of his extra earnings he's been able to make, a small check, and the rest of what he's paying for the business, I actually took back in the form of a note. So I get a monthly payment from the business to satisfy that note over the next 10 years. So
you've actually been able to avoid conventional debt, because I know typically, like if you were going to go into the business now as a young person or even a more senior person, I think the reality is in order to make it, you'd have to buy a book of business.
You would. And
to buy a book of business would, in essence, mean you'd have to borrow to pay the advisor.
That's correct.
So how did that work? And you'd rate it on I guess based on the trailers that's coming in and so on. And I've heard 2 times, 1.5 times, 2.5 times, whatever the value is to value the business, and then the new advisor has to go into debt. So yes. Can you speak a little bit more about that and how you've been able to avoid that?
Yeah, I think what I did, Lauren, I think a lot of it went back to how I started in business. When I started in business, it was back in the early 80s, 1983. And at that time, you had a fighting chance of starting in business and picking up clients one by one and making a living. I'd say it's virtually impossible to do that today. That you do need that book of business, like you mentioned. So when I started, I didn't have any help. I didn't have anybody backing me up. It was either make it or break it. So I did my first couple of years and developed some clients. Financiers were a little bit shaky, so I had to go and work for a trust company for a few years to kind of get back on an even keel. And then I took a management job for a few years after that, where I made some annual bonuses and whatnot, and then was able to build up the capital in order to go into business. So I actually started a mutual fund dealer and bought a financial planning practice all at the same time. So I was able to do it myself by doing it that way. Those type of doors, just aren't open anymore. So I figured, okay, how do I make this easy, workable for the right candidate? So that's when I thought, well, I don't need, several $100,000 more money in my bank account or in my investment portfolio, but cash flow I can use. So I discussed it with my accountant, and I think all of you know that, if you've got a corporation, you can take advantage of tax-free capital gains when you eventually sell the shares of that corporation. So I worked it out so, I'm getting paid a reasonable amount once per month. That's actually tax-free. That's my payment on the note for selling the business. I also am drawing a small salary from the business based on my part-time work that will go on for at least a few years. And overall, we've got a financial picture that works well for me and also works well for my successor, Joe, as he's coming in to take over the business. Because he's got things he's got to do over the next few years too. He's got to upgrade technology. He's got to hire more people because our practice is growing at the rate he's going to need a second full-time financial planner in that practice within the next 5 years, maybe even sooner. So I looked at it more from his point of view as the purchaser rather than from my point of view. Mm-hmm. And this is God honoring in that when we did this deal, and I got your advice on that as well, we did a 2-page preamble incorporating the biblical financial principles right into our sale and purchase agreement, recognizing that God owns it all and that this was really an exercise in stewardship. I was, the steward that has been working on building up those clients for a number of years and stewarding their money and resources. And now this was being transitioned to the next steward. So this is like a smooth transition. I don't think you ever read in any of those parables, Lauren, about any of those stewards having to pay out hundreds of thousands of dollars for their stewardship contract. So,
mm-hmm. Well, it's interesting to hear you talk about that, and I think it's God honoring in the sense you're having a younger person enter the business and not having to go into any debt, any significant debt to speak of, because the corporation is actually doing it. And I think it has come as a result of you yourself dealing with the question of how much is enough. Right. And in reality, you may very well have been able to say, yeah, I can probably get more than what I'm currently getting. But because you've answered the how much is enough question, you are fine with that. Yes. So at least that's what it seems like from my perspective. The other thing is who owns it anyway? Yes. Which kind of leads to that question. So I think it is God honoring, what you have done. And having been in the business, I know how challenging it can be for somebody new starting out to get into the business and how they need basically what you've provided for them, which is a stable income, stable salary, not having to go and sell right off the bat. But they've got a comfortable income, and it's worked in this case. So that's great. One question that's come in from Joel in BC. Glad you're joining us. He says he appreciates the wisdom that you shared, but he wanted to know a little more about your practice being fee-based, or is it assets under management? How are you basically being paid? And also, would that really make a difference to transferring? That's something that I would add on to it, I guess.
Yeah. I guess your last question, would that make a difference? From what I understand, based on how businesses are valued, and I talked to an expert last week, Chris Reynolds of IPC, who's bought 26 dealer businesses, and the way they're valued are basically based on net income before tax, so a multiple of that. So wherever the revenue is coming from would be based on a multiple of that revenue. So to answer you specifically, my practice is primarily mutual funds, And so it's trailer fee income. That's the lion's share of the income. We also do. We also have GIC and high interest bank accounts, so that accounts for some income, probably about 1/6 overall.
Mm-hmm.
And then we have also some fee income from not fee-based accounts, but actually charging people financial planning fees, tax preparation fees, that type of thing. And I prepared tax returns for clients the whole time I've been in business. But what Joe and I have had added just this year is actually fee-based financial planning, where we'll quote somebody a fee to do their financial or estate plan. We haven't really fully developed that area yet, but we see that as a growing part of our practice. Mm-hmm. Fee-based accounts, I think we've only got one of those. And what we find is our small town Ontario, our practice is centered in a town of 10,000 people with another town close by of 6,000. So most of our clients, probably 80% of our clients would be within a range of an hour of where our main office is. And they're generally speaking unsophisticated people. Mm-hmm. They like the way that the trailer fee system works. They all know we make 1% per year, whatever assets under administration for their mutual funds. They're quite happy with that. We only have a handful of, I would say, more sophisticated clients that generally are looking for something like a fee-based advisory. So.
Yeah, that's good. I appreciate it. Before everyone begins to take off, because we're running into the top of the hour, I want to make an offer for you. If you sign up and for our conference that's coming up in February, I'm going to send you a free book, Ron's book, Splitting Heirs, which we've talked about that on the call today. So if you sign up in the next 24 hours, I'll send a copy of that book to you. Now, some of you on the call have already registered. So here's my challenge to you. I'll send it to you if you register somebody else. Because our conference this year, it's quite a unique opportunity. It's providing 18 hours of CE, and that's available because you're going to have the content, access to the content from the conference for a full year. So you can access all 18 hours, and the cost, early bird deadline ends on December the 11th. The cost goes up by $50 US at that point. So if you register in the next 24 hours, I'll send you this book. We already have over 80 registered for this event. So it's going to be awesome to have a great group of Canadians. It is virtual. Yes, absolutely. But it is going to be an excellent opportunity. You will also receive a conference experience box. So it's going to be an interactive event. So the CE, by the way, is for the CKA and the CFP. For any other designations, because it cost us, you recognize it cost Kingdom Advisors to pay for that CE. So we're doing it through FP Canada. So typically, but in the States, it's covered, and I know some advisors in the past, it's covered for CPAs as well, and they have basically submitted their CE on a self-determined basis, in essence, saying it's Kingdom Advisors is really an international organization, so it should not be refused. It should be accepted because it's approved for CPAs in the U.S. So it's a great opportunity, a unique opportunity where you don't have to actually travel to Florida to be part of the event. Now, I know it's nice to get to Florida in February, but at the same time, this year, it's a busy time of the year. And I know we had advisors attend from all across Canada to our virtual event this year that would not have come to a Toronto event. The same thing is happening. We have advisors all across Canada who are registering for this event because it's virtual. This is an opportunity to experience something significant. Jonathan Lewis says, this is an opportunity for life transformation. So I definitely encourage you to register for that. Steve, any final word from you? Maybe you could also close us in prayer. That might not be a bad idea today. Really want to thank you for the wisdom that you shared, and thank everybody for being part of the call today.
Great. Thanks, Lauren. I think I'd just like to reiterate the importance and the power of having a written financial plan as probably one of the number one things I'd like you to take away with you today. Another thing that I didn't bring up already, but Lauren and I have certainly discussed it, is look at your personal cash flow, look at the cash flow of your clients. And when you're doing your own financial plan, their financial plan, work out how you're going to distribute that excess cash flow throughout the various elements of that financial plan. I think if you do those two things, you'll be successful. As far as incorporating the biblical financial principles, they're all there for you. There's a multitude of resources available through KA, and Lauren can help you with those. If any of you would like to send me an email or have a call or something involving Lauren and I, or just myself afterwards, just let Lauren know, and he'll put that together. So let's close in prayer today. Lord, thank you for this opportunity to meet virtually as Christian financial advisors, and to think of you, Lord, think of how we can honor you with our own finances and with our own planning, and also bring honor and glory to you, Lord, through the way we work with our clients. So, Lord, what we need to do that is we need your wisdom, Lord. We need that on a daily basis. We need to come to you constantly in prayer, and we need to make use of the resources that you've made available to us in many different ways. So, Lord, thank you for all that you've given us, all of the opportunities we have personally and in working with clients. And Lord, all the power and all the glory to you. We pray in your name. Amen.
Amen. Thank you again, Steve. Thanks everyone for joining as well. I would encourage you to be part of a study group this month. You can find the study group online if you're not part of one. Love for you to be part of that. If you have any questions about Kingdom Advisors, anything that's happening, or about the conference, CE, anything around that, please reach out. Appreciate it. Thank you all so very much, and have a Merry Christmas if I don't see you before then.